Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 14th, 2025, we're putting the spotlight on USDJPY, a pair currently at the center of conflicting fundamental narratives. Let's start by looking at the latest news which heavily influences this pair. Google searches indicate significant movement, with the current rate noted around 147.781 Japanese yen, showing a minus 0.60% decrease in the past 24 hours according to TradingView. A major headline comes from FX Street, reporting that USDJPY slumped to near 146.50 as U.S. Treasury Secretary Bessent anticipates Bank of Japan interest rate hikes. This clearly indicates a strong bearish sentiment for the pair, driven by expectations of yen strengthening due to a hawkish BOJ. The yen has indeed strengthened, reaching its highest level in 3 weeks around the 146.50 mark recently. However, contradicting this narrative, Investing.com highlights that the dollar is up due to strong U.S. producer prices surging in July and hot U.S. inflation data shaking confidence in Fed rate cuts. Such robust U.S. economic indicators would typically strengthen the U.S. dollar, thereby pushing USDJPY higher, creating a tug-of-war in market sentiment. It's important to note that our latest detailed chart data extends up to the end of August 13, 2025, so today's full price action and the reported 146.50 level may not be entirely captured yet. Now, let's turn our attention to the daily chart to understand the broader trends and significant price levels. Looking back to April 2024, we can see USDJPY experiencing substantial volatility. Notice the sharp decline from a high of around 160.185 on April 29, 2024, immediately followed by a steep drop to approximately 153.137 by May 2nd. This abrupt reversal, amounting to roughly 7 big figures in just a few days, was a dramatic event and could potentially be linked to early hints of central bank interventions or significant shifts in monetary policy expectations. Continuing on the daily chart, another major bearish move occurred in July and early August 2024. The pair saw a significant decline from near 158.00 in mid-July down to a low of 145.276 on August 4, 2024. This particular low aligns closely with the news report about the yen strengthening to around 146.50, suggesting that these fundamental announcements are indeed having a pronounced impact on the pair's long-term trajectory. The 145.00 level emerged as a crucial support zone following this strong bearish push. Overall, since late 2024, the daily chart has shown a pattern of lower highs and lower lows, indicating an overarching bearish trend despite intermittent rallies. Shifting our focus to the more recent daily candles leading up to August 13, 2025, we observe the pair trading within a volatile range. After a rally to around 150.806 on July 31st, we saw a sharp reversal, confirming the sensitivity around the 150.00 psychological level. The price then dipped towards the 146.69 region by August 4th, aligning with the reported yen strength. Since then, there has been a modest rebound, with the last available daily close for August 13, 2025, standing at 147.115. This rebound indicates that while bearish pressure from BOJ expectations is present, the counter-narrative of U.S. dollar strength is also at play, preventing a sustained downtrend for now. Let's zoom into the 1-hour chart to analyze the shorter-term dynamics, specifically from late July 2025. This timeframe reveals a brief, but notable upward movement from approximately 147.415 on July 25th, culminating in a peak of 149.051 by July 30th. This rally demonstrates the significant bullish response to positive U.S. economic data during that period, temporarily overriding the yen's strengthening narrative. However, it's worth noting that our provided 1-hour data ends on July 30th, so it doesn't capture the subsequent sharp declines that brought the price back down, as seen on the daily chart for early August. For the most detailed intraday view, let's examine the 15-minute chart, covering the period from August 10th to August 13th, 2025. Beginning around 147.78 on August 10th, the pair exhibited some choppy price action but gradually moved lower. A notable drop occurred on August 12th around 12:30 Universal Time Coordinated, as price fell sharply from 148.451 to 148.081, indicating strong bearish momentum during that specific hour. This short-term resistance level at approximately 148.40 proved significant. The market continued to show signs of weakness and downward pressure towards the close of the data on August 13th. The immediate support on this timeframe appears to be around the 147.10 to 147.20 zone, which is where our data concludes. Zooming into the very latest action on the 15-minute chart from August 12th to the end of August 13th, we can clearly see this continued short-term bearish bias. After the sharp drop on August 12th, the price made lower highs and lower lows, indicating that sellers were in control. The final candles on August 13th show the price descending towards the 147.115 mark, which is the last recorded close in our dataset. This persistent downward movement on the granular timeframe supports the news narrative of yen appreciation. Even if the widely reported 146.50 level has not yet been reflected in our provided historical data for August 13th. Let's recap the important price levels and discuss the bullish and bearish scenarios for USDJPY. Key support levels to watch are 147.00, a psychological level that was tested at our data's close, and the crucial 146.50 level mentioned in the news as a recent 3-week low. Below that, the strong historical support at 145.00 from August 2024 remains highly significant. On the resistance side, immediate levels are around 147.80 to 148.00, followed by 150.00, which has acted as a strong psychological and reversal point recently. Higher resistance stands at 152.00 to 153.00, and ultimately, the major historical high near 160.00. For a bullish outlook, strong and sustained positive U.S. economic data, particularly inflation and labor market figures, along with hawkish commentary from the Federal Reserve, would be necessary. A break and sustained hold above 148.00, then 150.00, would reinforce bullish sentiment, with a 60% likelihood if U.S. data continues to surprise positively and BOJ action remains ambiguous. Conversely, a bearish scenario would be confirmed by clear signals of an impending Bank of Japan rate hike or any indication of intervention to strengthen the yen. Weakening U.S. economic data could also exacerbate bearish pressure. A decisive break below 147.00, targeting 146.50 and potentially 145.00, holds a 70% likelihood given the recent yen-friendly news and the prevailing longer-term downtrend. Traders should closely monitor official statements from both the Federal Reserve and the Bank of Japan, as well as upcoming inflation and employment reports from both economies. Any unexpected shifts in central bank policy or significant economic surprises will be the primary drivers of USDJPY's next major move. Thank you for watching Explain the Charts. Don't forget to like this video, subscribe to our channel for more in-depth analyses, and hit the notification bell so you don't miss our next update.